So the talk is getting louder and louder that we are in an epic bubble that is destined to just destroy everything. But is that actually true? And what the heck can you do to protect yourself from all that? No problem, guys. I got you covered today with the truth without the hype. I'll give you guys the 5 signs that we are in a bubble. I'll give you 2 reasons why there actually may not be a bubble at all, and what you need to do as an investor to successfully navigate this time, because that's the key to all this in the end. It's not simply trying to guess what is and what isn't, but simply how do you navigate regardless of what happens. We'll talk about all that today. Just make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get today, guys. And thank you very much for those of you that hit the like button early. Really helps out the channel. Thank you guys very much. All right, so I know there's a lot of bubble talk right now. Lots of big investors are coming out saying there's a bubble talk, which, by the way, this happens a lot over the course of the years. I also heard it last year and the year before. It just kind of is what it is at this stage. There's not really a way around it. More importantly, bubbles can last for years. So trying to guess when they're going to happen and when they're going to pop is really, really hard to do, because markets, obviously, it's the famous quote, right? Markets can stay irrational longer than you can stay solvent. That's why short selling doesn't make any sense to me. A lot of other games that get played out there by Wall Street make absolutely no sense to me, because you're just basically fighting basic math. And that's what a lot of people like to do. But I am seeing some things out there that are showing me, hey, we might very well be in a bubble. So we got to talk about those. And there are a lot of different ways to protect yourself, which if you want to see specifically the entire breakdown of how to protect your portfolio during times like this, the Fall Frenzy sale is live for my group, where we have all that information through courses and coaching and everything else. We'll talk more about it at the end, but it's the pinned comment down there. Let's get into the signs of a bubble first, then we'll talk about exactly what to do about it and everything else. So the first sign, everyone is looking for the next 10x stock. Look, one of the surefire ways to know are we in a bubble or not, especially during the social media age, is whenever you go from, is it safe to buy stocks right now? I'm not sure about this, I'm not sure about that, to where everybody is just buying anything that somebody says, this could be the next 10x stock. When folks are more interested in finding the next 10x stock than finding the best company out there, or the potential future of something, or a company that's executing on the high level, whatever the case is, it's definitely a sign that we're kind of in a bubble market, right? 2021, everybody was looking for the next 10x stock. And oh, by the way, it can't 10x in, over the course of, 5 years, which would be incredible, right? It can't 10x in, a year. That would be spectacular, unbelievable, very, very rare. No, people want it to 10x in like a month or two, right? Or at least be marching up every single day, 15% gain, 15% gain, 25% gain. That's right there is what folks are looking for, is the next stock that's going to do that. And that is pure speculation at that stage, because what happens is you end up going down the food chain in terms of stocks. It starts off quality stocks go really, really high, and then all of a sudden lesser stocks, and then trash in the end. And right now we're in that point where people are legitimately looking at trash stocks. Even within my own group, sometimes there's some great stocks. People are finding some hidden gems. That's awesome. But there's also some stocks that, a lot of folks are throwing out there. And I think they get them from YouTube or social media or whatever the case is. X, probably one of the worst at, crazy during times like this, pushing out a lot of trash. And obviously, some of our group members will jump in there. They'll kind of break down the stock, break down the earnings, more importantly. And, the member will be like, ooh, wow, yeah, I didn't even see that. I hadn't looked at the earnings yet. Wow, that's terrible. I don't know why people want to own this stock. Exactly, because everybody's looking for the next 10x stock, which leaves you completely open to all the pump and dump trash that's out there that just gets us destroyed as retail investors. But it is a sign of a potential bubble forming as well. Number 2, great earnings don't matter, just the stock price going up. When you're kind of in bubble territory or in a hot market like we're in right now, people suddenly could care less what's on the earnings report. They just care whether or not the stock price goes up or not, right? They don't care that nothing changed with the stock. Just all of a sudden, I don't know, somebody, Wall Street decided to pump a stock up 8% one day, and all of a sudden it's all the rage. Forget about the earnings. Who cares about the earnings? Doesn't matter. The stock price is going up. It's got to be a great buy. Got to be a great company, right? Otherwise, the price wouldn't go up. That's the thought process that I'm seeing and that I'm hearing from folks, especially in the comment section right here on YouTube, where that's just simply not true. You have to buy great companies. They have to be giving you great earnings. Just simply because the stock price goes up has very little correlation to the business underneath, especially in a hot market like this. This is one of the harder times for newer investors jumping in who don't understand, look at the earnings and actually get into the earnings, actually see what the business is doing. They judge everything by stock price. And that is one of the worst ways to invest, because it just simply leaves you open for that classic buy high, sell low type scenario, rinse and repeat. Because if you think a stock is great because it's just going up and the business underneath may very well be sucking, whenever it falls, you're going to be like, oh, this stock's terrible, regardless of if it has a great business underneath or not. See, Meta back in the $80 range, right? A lot of folks were telling me, Meta's trash. Why the heck are you buying Meta, Luke? That's stupid. It's a terrible stock. What's telling you it's a terrible stock, a terrible company? What? They had reasonable earnings. I get it. He was spending too much on the metaverse, but it was very, very easy to stop doing that. There was nothing about the business that was trash. It was still printing money, despite the fact he was mismanaging it. But people were saying that because the stock price is down. Same exact thing, with a lot of different stocks that we've owned, right? Forever. Palantir's trash. SoFi's trash. Whenever they were at $4 and $6, respectively. Now all of a sudden they're at all-time highs and they're great companies. It's just, that's people correlating stock price to the quality of the stock, and it just doesn't correlate all the time. I care about quality stocks, quality companies, great companies, but when you're in a bubble type market, all of a sudden, great earnings don't matter. It's just simply what stock is going up. Sign number 3, interested in a stock after a big move up. Another sign that you're in a bubble type market is when nobody's talking about a stock, then a stock moves 30% in a day for whatever reason, right? That tends to happen during bubble time. You just have these crazy pop-off times. Sometimes it's because of earnings. Sometimes it's just, a news article comes out. Sometimes it's just, crazy stuff happens in the stock market. Kind of is what it is at this stage. But when that happens, all of a sudden, now everybody wants to know about the stock. Oh, make a video about that stock. Oh, let me know if there's a good opportunity there or not. Well, guys, nothing changed in most cases with a lot of those companies. It just simply, the stock had a big move up. Now all of a sudden you're interested. That's what happens during bubble times, is all of a sudden people aren't looking for great businesses that are undervalued and right there and ready for you to actually take advantage of and to make big money long run, right? Time, build out your position, make money long run. No, they're only interested after it has a massive move up, right? You saw it with Palantir. It didn't hit the top 10 retail stocks list until it was over $100 per share. Now it's on that list every single time, despite the fact we're near all-time highs. Whenever it was at $6, $15, $20, $30, $40, $50, it wouldn't make the list. It wasn't even sniffing the list. But has an epic run, whatever the heck the run was. It seemed like it was more than a 10x there in less than a year. Now everybody's interested in the stock. Now everybody wants to pile into the stock. It's definitely a sign that you might very well be in a bubble market. Number 4, time in the market is now easy and superior to time in the market. This is something that I see more and more and more as this hot market continues to move on. More and more folks are telling me that somehow, one, they can time the market. It's really easy to know when to buy. It's really easy to know when to sell. It's really easy to see the pullbacks. And then it's really easy to buy the dip. That right there is what I'm hearing repeatedly. And a lot of folks are saying, why would I ever try to just hold and just add on the dips whenever I can just get in and out and make more money? That is another indication that we are in a bubble market. Nobody's saying that back in 2022. That was not a comment I saw at all in any of my comment section on any of my videos. Now, especially if I talk about don't try to, trade, don't try to get in and out of stocks. It's a losing game. Oh man, there'll be a plethora of people down below telling me how I'm wrong and giving me examples like, well, I did this one time here, and then I did this here. And I don't know, somehow magically that's going to sway, basically 80 years worth of data, 100 years worth of data, studies done by Goldman Sachs, studies done by other big banks, studies done in our group. Basically every single study that's ever existed on the stock market says time in the market beats timing the market. But yet in bubble markets, those folks come out in droves, and sure, they might very well be right in the short term, but they're going to be remarkably wrong in the long term. But it is a sign that we might be in a bubble market. And number 5, FOMO is very real. Not a lot of people feeling FOMO back in 2022. A lot of folks feeling FOMO in 2021 before then, trying to jump into all kinds of crazy stocks at all kinds of crazy high valuations because it's the future and it's going to the moon and you got to get in right now before it just takes off and never comes back down. None of those things are completely true, and FOMO is back again. There are a lot of folks willing to pay any price to just be into a stock because it's the future, because it's going here, it's going there, it's doing this, it's doing that. And there's a lot of great stocks out there. And I'm not telling you not to buy stocks, but when you're feeling that FOMO feeling like, if I don't buy it right now, I'm never going to get a chance to buy it again. And especially whenever the valuation just doesn't align with reality, that's a good chance that you could be buying high. And if you're just patient and you didn't give in to your FOMO, you could be buying low instead. But right now, I'm seeing more and more FOMO come across a lot of different stocks there. And that is definitely a sign that we are very much in a bubble. But despite all that, despite those reasons I just gave you, let me give you the 2 reasons why I think the bubble talk personally may not be true at all. So the first one is the tech bubble had no earnings. All right, I know a lot of you guys were not investing during the tech bubble. All you see is the quick flash social media posts and all that sort of stuff. As somebody who invested and lost a lot of money in the tech bubble, matter of fact, almost all of my money, I can tell you right now, this is nothing close to that at all. There was a couple of companies that were making money at that stage, but the vast majority of them had no earnings whatsoever. So let's run through a few examples here to just show you how ridiculous that narrative is, that we are anywhere near tech bubble levels or anything else of that nature. Now, maybe we get there one day. We are not even close to it today. So NVIDIA, Palantir, Meta, Google, Amazon, Microsoft, all have incredible earnings. Those are the big players today that are just, making huge plays in the AI race, the AI bubble, and they just all have incredible earnings. Every single one of them have just crushed it on earnings quarter in and quarter out for years now, during all that sort of stuff. Now, contrast that with the tech bubble, where the vast majority of the hot stocks that were popping off and going off had no earnings, just a website. That's all that they had. Basically, you would go public. You had this thing called a website. People could log on there and see your logo and your name. Oh my gosh. Oh, that's an immediate $200 million valuation right there at least. Oh, and you got to buy it because that's the future. There it is. Again, it's because nobody understood what the heck the internet was, just like we don't understand what AI is today. Now, I would agree, there are some AI plays that are not drawing a dime and getting massive valuations, but we're talking about publicly traded companies here, and more importantly, the stock market itself, and the biggest players in the AI space are printing cash, guys. They are printing cash here, there, everywhere. It's coming out of their ears. They're printing so much cash out of it. Tech bubble, very few companies were printing cash out of the tech bubble. It was almost like, I don't know how else to explain it outside of, it was very, very different, much, much, much more speculative. And more importantly, most companies back then were not printing cash because of the internet. It's coming, right? Lots of companies print cash because of the internet now. A lot of the ones I just listed print cash because of the internet. But back then, that was what was going to happen. And I agree it was the future, but the vast majority of the companies were not actually printing cash to that bottom line. And the second reason is valuation is still reasonable. Now look, guys, remember, I buy individual stocks. I don't care if the market valuation is higher. I don't buy the market. If you're buying index funds, that's worrying. I don't buy index funds, so I don't care. I care about the valuation of my stocks themselves. And right now, especially relative to the tech bubble time, which is what this always gets compared to, it's not even close in regards to valuation. So let's look at a few, right? NVIDIA's PE is in the 50s. Google's is in the 20s. So is Amazon. Might be up over 30 now, I'm not sure, but the point being, still ridiculously cheap. Microsoft is in the 30s. Now that is a far cry from the last, basically a little bubble, EV bubble that we had, right? Tesla at 1,000 PE in 2021. Obviously, the other big players in that space going to the moon, and they weren't even making money, right? They were losing money, and they were still trading at ridiculous multiples, and there was no way, even if they had earnings, they could make that. Or go back to the tech bubble days. Oracle and Cisco, who were the two big money printers back then, they were still at PEs well over 200 at the time, which, by the way, I know that doesn't seem anything, compared to Tesla's 1,000. That seems, 200 is not crazy. Well, back then, that was unheard of. You guys got to understand, you got to context things. You cannot take something from the 1990s, apply it to today's metrics, and show them as the same. They're not. That back then was kind of like Tesla being up at 1,000 in 2021. People were just like, this is insane. How the heck can you pay this? But yet people were doing it. And remember, all of the no earnings companies were gaining market caps, had massive market caps, and were marching up the market cap deal, despite the fact they had no earnings whatsoever. So, their PEs were technically infinite at that stage. The valuation back then in those, tech bubble specific stocks was absolutely insane across the board compared to the winners right now and the people that are crushing it in the AI space. It's not even close. I'm not saying some aren't red hot, right? Obviously, Palantir, red hot, way overvalued. But that's one that I can point to, and then I can point to NVIDIA and just go, look at that. Point to Microsoft, point to Google, point to Amazon. All those other ones are not even in the ballpark of that. So yes, there is a few that are popping off, have crazy. Yes, I understand there's some crazy valuations being pulled out there by some AI companies that aren't publicly traded right now, but that does not encompass the vast majority of the stock market. So regardless of whether we're in a bubble or not, you can have your own opinion on that. You can say we are, you can say we aren't. Nobody knows, and we won't know until after the aftermath of all this sort of stuff happens. What does it take to succeed in this type of market? What we're in right now, regardless if you want to call it a bubble, not a bubble, what does it take to succeed? Let's talk about that next. So number one, buy great businesses at fair or undervalued prices. Now I got it. In 2022, that was so easy to do, right? There were tons of great businesses on 70% discounts, 50% discounts. It's not true today. I would agree there completely. But we have gotten great businesses at fair or even undervalued prices at various times, right? I mean, hey, you had SoFi this year in the 9s, Palantir last year in the 20s. Obviously, we had Google just recently in the 150s. You had Amazon under $200 for a long time there. Nvidia has kind of come up and on in regards to valuation and gotten cheap or gotten negative news or whatever the case is. We bought Meta last year for $450. You can believe that. Even a stock like Tesla, which I know is divisive out there, but we bought it last year in the mid 150s or so. You get opportunities in great stocks, great companies, great businesses. Just during times like these, you just got to be more selective and more patient. No, it's not like shooting fish in a barrel in 2022, and that's okay. You don't need it to be. In order to survive these times, I just simply buy at great prices. That doesn't mean I'm not going to get better pricing in the future, but I can't predict the future. All I know is if I'm buying undervalued shares right now, they're going to make me money in the long run, and that is what matters. Number two, stop looking for the next Palantir at $6. Look, guys, there are gems out there to be had. There are great companies that are at really, really low prices right now. New companies with huge growth potential like Palantir had at that particular, back, 2-3 years ago. Right now, today, there are companies out there that are like that. The difference is they're not going to give you pricing like you got Palantir at $6. It does not exist in this type of market. So you have to quit looking for it, because what happens is instead of buying a high quality company like Palantir at $6, because you negate, this is a high quality company, but it's not really as cheap as I wanted. It's not, it's not overvalued, but it's not really cheap. It's not that next Palantir at $6 where I can make this, giant, 1,000+% return gain in just a very, very short period of time. So you end up going down the quality chain. So you end up buying trash in the end because it has the potential, especially on social media, to be the next Palantir at $6. Because of course, right now, if you put that out there on any video, you get tons of clicks, tons of likes. Everybody's your best friend. Everybody wants to sign up for your courses and your groups and all that other good stuff like that. I understand it completely. But unfortunately, in this type of market, you are probably not going to find the Palantir at $6. That's not going to happen. You might find another gem like Palantir, but it's not going to be at $6 per share. That only happens during a bad market, during an ugly market, during an ugly downturn. And that's just facts, guys. That is just simply how it works. It doesn't mean you can't find gems out there. Doesn't mean there aren't great businesses right now. But a great business at a stupid, ridiculously low price that's going to make you those thousands of percent potentially very, very quick in the future that don't usually exist in these type of markets. So you're wasting your time looking for that. Simply look at quality businesses and look to buy those at fair or undervalued prices. And number three, don't try to time anything. Now look, I'm going to address both the folks trying to time the market and trade in and out. Guys, that's a losing game. You might win in the short term. You're going to lose in the long term. Sorry, the stats they work against you. If you're the anomaly, awesome. More power to you. That's great. But the vast majority of you guys out there trying that are going to lose. And vice versa. The folks who are going, hey, the market's red hot, I'm just going to sit in cash and not do anything. You're also losing as well, because you're still trying to time the market a little bit, waiting for the giant crash to happen or whatever. I'm just going to stack my cash till then. I agree. My cash pile is building up, but it's not because I'm intentionally looking at the market and going, hey, I think it's overvalued right now, so I'm just going to lay back and wait. It's just simply nothing's fallen to my price target. However, when something has fallen to my price target, I am pouncing. Something is even just at a fair price and we get a little bit of a discount. Hey man, I'm just starting up a DCA, just DCAing into that because I know share count is what matters in the end and I can't time anything. Same exact thing. I didn't time anything in 2022 at all. I just knew in 2021, the only thing available to me that I really wanted to buy at the time that I was really excited about was Apple at 100 and something bucks, 115, whatever the heck the case was. Because everything else had gone to the moon. I wanted Palantir, but it was at like, 30, 40 bucks, whatever the case was. I wasn't paying for that back in 2021. I didn't see $6 coming later on, right? I had no idea that was coming, but I definitely wasn't going to pay 40 for it at the time. So I just simply stacked cash and waited for my opportunity. No clue 2022 was going to happen. No clue Palantir was going down to 6. No clue about any of that sort of stuff. Just knew the best deal in the market at that time was Apple at that stage, in my opinion, for what I was looking to buy. And then obviously 2022 happened and it was like, hey, put more money than I've ever put in the stock market then, right? So all that cash went to it, plus I was pulling for other places and such, but I didn't try to time anything. I just simply executed on my plan, and that's how it worked out. That is how you stay out of trouble in markets like this. Have that plan, be prepared, and simply move forward with your investing. And if you want help with all that, you want direct access to me helping you personally with that through courses, through coaching, through live Q&As, jump in my DMs, whatever the case is. Check out the pinned comment for the Fall Frenzy sale that's going on right now, where you get access to all that. Guys, there's so much involved. Just check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.